We talk about the housing market a lot on this channel with a huge focus on what is occurring right now, with a little bit of focus on history and what has happened since 1970. I actually want to flip the script for the very first time and look into the future 10 years, 5 years, maybe 20 years. We're going to have this conversation with somebody that's been in the housing market as long as I have, the one and only and amazing Anna Kelly. Hi, Anna.
Hi, what an introduction. Thank you.
Very, very welcome. This is something I haven't done, which is really hard to say when you do 17,000 videos in 8 years. I've actually never talked about the housing market kind of in a decade, right? It's always very much what happened right now, or as you and I have done, what's happened over the last 55 years.
Yeah.
But let's look at our broken crystal balls and talk housing 2035. What do you see out there? What do you see happening?
Yeah, I like that you say a broken crystal ball. I've gotten kind of the future right sometimes, but the timing's really tough. 10 years gives us a long time. And as we've seen in the last 5, a lot can happen in 5, much less 10.
Yeah, exactly.
But my gut reaction to that, Michael, because we didn't prepare for this, right? You didn't warn me what we're going to talk about. My gut reaction is that there's a quote, and I don't remember who said it, is demographics is destiny. And so, real estate, like many things in the economy, is really all about supply and demand. And so when we want to try to extrapolate into the future, what might happen if we just look at supply and demand and what we know is going on with supply and demand, that should give us probably our best possible projections of what might happen. And so I always say that real estate is really not one market. And I know you've basically said that as well. It's really different based on location. So we go back to another old adage, location, location, location. And so when I put those things together, I really want to think about what happens in different areas of the country with relation to demographics and demand for housing. And then we can, look at what's happening to supply of housing in that same time period. So that's where I think I would start. The difficulty in 10 years is that so many things could change demand for housing, right? And we saw that in COVID, for example. People wanted to they could work from home. So they're like, if I can work from home, I want to be able to move anywhere. And by and large, that move was, it took people to the South. It took people to primarily Texas and Florida, although, lots of states got an incoming number of people. A lot of people left California and went to Nevada, for example. Lots of different areas around there, but Utah saw a big increase, especially in certain big cities of Utah. And then we had the political ramifications of all that. And people left New York in droves, like all the places that politically tied down businesses, tied down where you could go, when you could go. We saw a lot of political changes move people south. But unfortunately, that huge increase in demand, Michael, brought a ton of building, it was fortunate for the people that didn't have housing. So you could say those areas were very undersupplied for this new wave of demand. Also, we had a big influx of immigration. And so what you're seeing now, though, is this stark reversal of everything that we said happened. And then all of a sudden companies said, you have to come back to the office. And taxes went crazy, real estate taxes in both Texas and Florida, where I own quite a bit of property. So I've seen that. Then you had natural disasters, floods and hurricanes and fires and droughts really caused significant increase in property insurance. And I'm talking 400% increase in several areas that I'm talking about over just a short period of time. So what that's done, and the backtracking of the administration into immigration policy, is suddenly you have this huge reversal of demand, and you have certain pockets like Austin and Dallas and Houston, where I invest, that are oversupplied for current demand when a lot of those people have left. And so I think that's a lesson in history that we need to learn, to not get too confident when people say, oh, housing is so undersupplied that we have a national shortage of millions of homes. That may be true in certain demographics and in certain areas. But the question that we have to get right as investors is, where do I see that demand continuing in areas that are undersupplied. And then in those particular markets where we see people are going to want to live, right? You kind of look at what makes people want to live in an area. It's usually really good jobs, lots of diverse jobs, lots of amenities, great schools, low crime. It generally means a more conservative city that is pro-growth and lower taxes and lower crime and great schools. And so that still is as an investor so fundamental to investing that you have to say, what are those fundamentals that are going to keep people there? And so even though I see this big reversal and we have oversupplied housing in certain cities like Austin and Dallas, there is so much growth in those areas, especially the DFW area and the outskirts of Houston, outskirts of Austin, where the local politics is more conservative, even though the main city has gone more liberal. You've got so much pro-business and pro-growth there that I think we have decades to come of those businesses building out, those AI data centers, for example, those industrial manufacturing jobs that the administration is trying to bring back. By and large, they're going to Texas, right? And I might be biased because I'm from Texas and everything is better and usually bigger in Texas, including our big highs and our big lows. But I think that we need to look at, when we talk about where things are going to go, you have to look at what areas of the country and then what cities specifically are most likely to have continued growth of strong GDP, continued tax policies, and government policies that are going to be pro-growth, pro-business, pro-higher wages. And then that's where you want to invest because it's going to continue to draw more people. It's going to be undersupplied, at least while interest rates are high. And so it's going to take several years to develop enough housing for those people. And then we have to watch very, very closely. The opposite of that, Michael, is where are people leaving? And I want to say this without sounding political, but,
good luck. Good luck.
Politics, has consequences, right? And so I look at things like New York City and this mayoral candidate Mamdani, who is a socialist, and it's one of the it is the largest Jewish population other than Israel, and yet in New York City, and yet they have a very anti-Israel, pro-socialist guy who is leading the race for the Democrats for that city. I can tell you, Michael, just as a freedom-loving American who is not for socialism, right? If that happens and he gets in, you will see a mass exodus of New Yorkers, those that are conservative, those that are Jewish, those that are pro-growth, those who are anti-rent controls and things like that. So I wouldn't want to be investing in New York City for the next 10 years, but a lot can depend on who is your leadership and do they turn around that anti-growth, anti-real estate landlord perspective. And so you better be watching your local markets, and you're going to have to look at where you think things are going to go and the government policies that are going to push growth in certain areas, in certain sectors, that are going to pull away growth from other sectors that are no longer important to them, like DEI and some of the clean energy. We're seeing a big reversal of all that. And so you're going to have winners and losers in different areas of the country. And that's going to give you a different outcome in housing. Where we talked about like Texas, I think values will continue to go up. You and I looked back overnight. You did this amazing spreadsheet we've talked about a few times, not in a couple years, but going back to the early 1970s. I mean, our lifetime, real estate has gone up 1% per year on an inflation adjusted basis, just natural appreciation without flipping, without, forcing appreciation. And so if you say over the next 10 years, you see kind of history play out, that's average 10% growth in values over the next 10 years, but it's going to be very bifurcated in certain locations based on that supply and the demand.
Yeah, love it. When I look at the housing market in 2035, I'm going to, this is probably a little bit of hopium, but it's my show, so I can have it. I'm going to hope some of the trends that we are already seeing that are in their infancy go mainstream. What am I talking about? It's basically things that make housing cheaper, like ADUs, right? I believe that ADUs in very high priced markets are part of the solution, because
Yes.
housing's unaffordable. So
Mhm.
if we can take residential properties and add, the ones that have the space, the land, another dwelling, that will help affordability. The tiny homes, right? The
Yes.
smaller homes. Something I was at the original Resi Club in New York a little bit over a year ago, and I was asked, if I had a magic wand, what would I wish for? And I said I would wish for the average new home construction to drop to 1,800 square feet. When I said that statement, the average was almost 2,400. It's now under 2,200. So it is going the right direction.
Mhm.
The last thing I'll say is we haven't had since the 1950s a focus on building entry-level homes, right? Builders since the great financial crisis have predominantly built luxury or spec because that's where the profit is, right? There was
Yes.
no profit in the entry-level, 3-bedroom, 1-bath, 3, 1.5, whatever it is. But we've got to figure that out. We've got to make it profitable somehow, some way. So,
Yeah.
and then the last thing I'll say about housing 2035 is it will be more affordable. Note, I did not say cheaper. I didn't say prices
Right.
are going to fall, right?
Right.
I said affordable. And you got to remember, in housing, even if venture consulting confuses you with the chart that talks about price and wages, unless you pay cash for your house, that those two variables are incomplete. You need to add interest rates, right? Because it's a
Right.
payment-based decision.
Yes.
I'm going to say housing's going to be more housing. I'll declare this right now, and I'll put $100 on it. And if I'm wrong, the first person to tell me I'm wrong in 2035 gets $100. Housing would be more affordable. So I think prices are going to be relatively flat for the next 4 to 6 years, because I think we got all the appreciation at the beginning of the decade.
Yeah.
I think interest rates will generally be lower, not crazy lower, but lower over time. But the big one that'll change is wages. Wages for the average American in a decade will probably be up 15%, 20%. Decade's a long time, right?
Yeah.
So if you make 40 grand a year in a decade, just think about it. You're an adult today, you're 32. Let's just pretend you make 50 grand. By the time you're 42, right, I'm going to hope you make 80 grand, 100 grand,
Yeah.
right? So, again, I think housing will be affordable and hopefully focus on smaller. So that's what I'm thinking 2035.
Yeah. I hope that you're right, right? Again, going back to hopium. I think I coined that phrase, but I don't know, maybe not. But you can't invest on hopium, but you also
True.
don't want to be totally gloom and doom. I mean, the one thing about the United States is we have at least figured out how to keep things going. And anytime we've had any major problem, they've come up with new solutions to try to continue to grow and to prosper. And so we have to hope for prosperity for the nation, despite all of the challenges. The thing that I would push back on a little bit that makes me a little less optimistic on wages is that if you just look at where we are today, and again, we don't know, a lot of this is going to depend on the success of the current administration's financial goals. And whether you like the administration or not, it's made up, Congress is made up of close to 50-50, right? Dems and Republicans. And so, you've got an administration that, yes, it's GOP led. And that's been a stark reversal of a lot of financial policies that if the president loses the election to a Democrat before that, his financial plan is implemented. So before they're saying it's going to take 8 to 10 years. So they need not only to be reelected next time, but maybe even the next time in order to get these pro-growth policies into place. And if that changes, you could see a stark reversal and all bets are off as to our projections. But let me just, say that their plan is basically to continue to grow spending because there's no way really out of it right now unless you have a stark austerity program, which is significantly cutting your expenses for the things that you absolutely have to fund because of promises to the American people like Medicaid and Social Security. So they've already kind of shown, hey, we've done everything we can to cut expenses via things like DOGE. There may be more government layoff. They'd like to lighten the bloat and make the government smaller, which results in some less spending. But the reality is the largest expenditures that really can't be cut by just cutting government size, our Medicare, Social Security, the interest on the debt, and defense spending, all of which are important. And so basically they're trying to kind of bend the curve. They're trying to give tax incentives. And the good thing is they've got some for corporates, and then they've got some for the American people, like no tax on tips, no tax on Social Security for some period of time. But their hope is that incentivizes true investment this time, not just financial engineering from low interest rates, but true growth across the economy broadly in things that we haven't really seen growth on, like industrial production and manufacturing and housing, because historically housing and manufacturing need to boom in order to create an expansion. And housing and manufacturing bust first, and we've already seen that. Then you have broad profits across broad industries start to go up or down, and we're seeing a decline in that. So what they're hoping to do is create this broad investment that creates broad economic growth, not just in a sector like AI. If they're successful in doing that through like the tax incentives that they've had, and in the next 10 years, Michael, we get that big reshoring, bringing back chips, bringing back pharmaceuticals, bringing back production. That's what a lot of this tariffs is about. If you can get that growth, then yes, that's going to lead into higher wages. And it wouldn't surprise me to start seeing more tax incentives come out, like what we had in multifamily the last couple of years that said, hey, if you not only build energy efficient, but you pay a prevailing wage, you'll get extra tax discounts, tax write-offs, 1-to-1, dollar for dollar, not just like depreciation offset, but every dollar you spend, you get a tax deduction of a full dollar. And that incentivizes paying essentially like a living wage, like universal basic income. And so it's a very pro-growth, pro-wage increase economy. If they can get that through, especially in these certain areas like we just talked about, then yes, wages will go up, and that'll make housing more affordable if that wage growth keeps up with inflation. And that's the big if. And where I say I'm a little more doomy than hopeful, although I'm not doom and gloom, is the administration going to get everything they need to get that all implemented in the next 8 to 10 years? And if they're not successful in doing that, or we have a change, then wages may really struggle if we do in fact have higher inflation. And I think we are going to have higher inflation because all of this spending that's going into the economy, it's going to create monetary inflation. And I think we've probably talked about that a little bit, but that feeds into, you think you have more money, people go spend more money, it then creates more price inflation. That will make the prices of homes go up. But at some extent, you've got to say, is the government going to be successful at getting wages above inflation such that houses really do become more affordable? Unless we get construction costs down and insurance costs down and taxes down, I don't believe that housing is going to get more affordable. Maybe for the low end, maybe if the new home builders focus on the low end, but they make much more profits focusing on the high end. So barring some kind of big investment in new housing for entry-level homes, maybe it's the 40-year mortgage we've talked about. Maybe that becomes, federalized. I just don't know that housing is going to get more affordable. I hope that it does. It's a big part of the American dream, but I just don't know that in the next 10 years we're going to see that. And the last data point, and I know this is a lot of information, so thank you for being patient with me as I think through this, but I think I talked about a chart probably about 2 years ago. It went back to the 1970s. I want to say it was 1972, 2 years before I was born. And it went all the way to 2019, pre-pandemic. And when it looked at 2019 wages on an inflation adjusted basis, Michael, they were within pennies of exactly the same wage as what you made in the 1970s. So you might think, wow, I went from making $20,000 a year to $90,000 a year. But on a real inflation adjusted basis, wages were flat. And we've seen that for over 50 years. COVID brought some wages up, but not commensurate with inflation. And so if we have a more inflationary future, like I think we will, I don't think real wages are going to keep up with real expenses. And unfortunately, I think that that could mean we have a housing affordability crisis that lasts much, much longer, even into the next decade, with hope that we find solutions that make that not the case.
Well, the last question I think about when I think housing 2035, I think about ownership, right? Home ownership, like you talked about, has been part of the American dream. I think it's ranged from 64 to 68%. I don't know what it is today, but I'm going to say it's 66%. I'm going to split the difference. I'm curious if, given your thoughts, that if we go out a decade, it sounds like, but don't let me put words in your mouth. It sounds like you think that's going down, not up, given affordability. So it's going to go down to 64 or 62 or something like that.
Yeah, and maybe not precipitously. This is where I have not honestly done enough digging into the demographics and the demographic trajectory to give you like a objective number. But just subjectively, if we just talk about what I started this with, is demographics is destiny. What we're seeing, at least today, is most homes that are actually being bought, they're being bought by those that are 50 plus. They're being bought by those that already have money. So the percentage of that home ownership has gone way up into the older ages, people that have generally built their wealth over time, or it's been investors. Investors now make up a larger percentage of those that are buying, as well as that older demographic. So unfortunately, what we're seeing is that those who traditionally would be buying houses, that first-time home buyer, were in their late 20s to early 30s. That's being pushed out longer. And so a lot of the changes that we're kind of seeing, and the question is this a generational change, or is it just a temporary change as a result of low supply, high demand, low interest rates? We don't know if that trend's going to continue. But if it does, younger people are like, I don't want the headache of the property. They want to travel. They're much more about experiences than accumulating stuff. And until they're ready to have kids, they're not buying houses, they're renting. And, renting isn't cheap either. But we tend to have a trend demographically, if it continues, Michael, where people are delaying getting married. They're delaying or not having kids. And this is a huge demographic issue that there's not really enough talk about. We have so pushed independence and family planning and abortion and never getting married, such that people are not having kids. So if you're not having as many kids as early, then that demand for that house just isn't nearly what it used to be, right? So not only do you want smaller houses, but is this next generation focusing on experiences and being mobile and just renting and then investing that money that they would be putting in a down payment, putting it into the stock market and the gold and crypto and all that stuff? But if we don't start having more kids, and this is, with all deference to whatever your individual choices are, if we as a population are not pushing, you need to have more kids, because if you don't, we're not going to be able to fund Social Security and Medicaid and all these things. Then the only other solution is you have to allow a lot more immigration. Of course, there's going to be discussions on, and personally, I think that needs to be done legally. We need to know who's coming. And the current administration's policies, like them or hate them, right, have slowed immigration, have slowed significantly illegal immigration. And now they're trying to slow some of that legal immigration, which I don't necessarily agree with, because demographics is destiny. But the recent, you're going to have to pay $100,000 to get someone from India that has a tech specialty or engineering or doctorate. You're going to have to pay $100,000 as an employer to get them here. That could really hurt us demographically. And so, you want to be pro-America, you want to be pro-American jobs, but you have to understand that immigration is a necessity because we are under the replacement value. I think it was something like 2.1 or 2.2 kids per family. And now the last thing I said was it was down to maybe 1.6 something, Michael.
1.6. Yeah, exactly. And I saw that recently.
That means that I don't know how many years, 20 years, maybe, it's not that far away, we will not have enough people working, making wages, paying taxes. And i.e., if you're not making enough wages and paying taxes, to support that, you're not going to have economic growth. You're not going to have an increase in wages and lifestyle. And so I think that means that less people demand housing than they do today. And that if the baby, but let's just say it's 20 years, because again, I'm talking subjectively, not objective facts with how many population's going to be in each city in 20 or 30 years versus the housing stock currently there. But let's just say that those that are buying today in their 50s to 70s, that baby boomers do have that big sell-off, and their kids are like, I don't need the big 5-bedroom house or the big 3-bedroom house. You could end up in a situation in 20 or 30 years if you do not allow more immigration and encourage people having more kids, where you become oversupplied with housing.
Yeah, look at Japan.
What happened in China. Yeah, Japan, China. So it can happen. So I think we just don't want to be caught asleep at the wheel saying we have so few houses compared to the demand. Not if the demand keeps going where it's going, which is on a decline. So again, it's going to be very, very important to go back to what we started with, that growth, supply and demand. It's all going to be very, very regional. And so you've got to watch, where are people coming that are coming into the country? Where are people still having kids? Where are the jobs coming? Because I think you could see a hollowing out, that certain areas of the country are going to be way oversupplied, and then housing values are going to fall, wages are going to fall. And I think you could kind of see a lot of the hollowing out of suburban or rural America. And you start to see much bigger clusters of certain cities that are the winners and the losers of the jobs, of the people, of the growth. And you just have to really watch to make sure you're making wise investment decisions based on what's happening and the policies of the government that are going to help or hurt demographics, because that's really going to make a big difference in housing affordability and housing prices going forward.
All righty, folks, let us know what you think. Housing 2035, 10 years from now, what do you see happening? Love to see the comments below. Anna, where can people find you?
Great. You can find me here on your show, on social media at Anna Kelly REI Mom. And if you're interested in real estate and wealth coaching or consulting, you can book an appointment with me at AnnaKellyInvesting.com.
Thank you so much. Have a great week.
You too.